Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Stocks struggle for direction as investors eye US factory inflation data due today for fresh clues on the Fed's rate path ahead. Apple's biggest supplier, Hon Hai, is set to report this hour. We're going to bring you those earnings when they break and discuss what they mean and could say about the health of the tech sector and China's economy. Plus, the clock ticks for TikTok. Yes, the fate of the popular video app is now in the hands of the US Senate after the House votes to force its Chinese owners to sell up or face a ban. Let's check in on these markets then. Yes, it was a lackluster session over on Wall Street. The Nasdaq ended lower by about 0.8%. The S&P closed lower about 0.2%. It was a fresh record, though, for European stocks. Just worth reflecting on that. We're looking for the catalysts later today. Perhaps they'll come through in terms of the factory data, the producer prices out of the US, whether or not the PPI print out of the US confirms the stickiness that we saw in CPI, the Consumer Price Index, or indeed puts a question mark over the sticky narrative. So producer prices in focus for us today, retail sales and initial jobless claims out of the US as well. S&P futures currently flat, as you can see. European futures, I should say, flat after the record gains yesterday. FTSE 100 futures currently at 7,775. S&P futures pointing to modest gains of 0.1%, again after a slightly lackluster session, closing lower by 0.2 yesterday, but comfortably above that 5,200 level still. Nasdaq futures 18,382, looking to gain 0.3% so far across those futures. Let's flip the board then and look across asset. We continue, of course, to monitor what's happening in the Japanese yen as we build up to that really important wage negotiation result that is expected out of Japan on Friday. And we know that's going to be crucial for the BOJ, the Bank of Japan, as they consider whether or not to hike for the first time since 2007 at that meeting next week. The Japanese yen currently at 147, just stronger by about 0.1%. The US benchmark 10-year at 419. 419, we'll be watching that, of course, and across the Treasury curve on the back of the producer price data out later in the US. Brent at $84 a barrel, a gain of just under 0.1% in the session, but at a almost 5-week high. You have stockpiles reducing, the inventories reducing in the US, and then, of course, those attacks by Ukraine apparently on those Russian refineries as well, providing some support for oil, $84 a barrel. Bitcoin remaining above 73,000 at 73,183 so far in the session. Let's cross over to Asia now, check in how the markets there are faring with Avril Hong standing by in Singapore. Avril.
Yeah, Tom, we're seeing a bit of a mixed picture emerging this Thursday, and those energy names rising along with energy prices. But apart from that, there's really not much appetite for risk because, as you know, we have the BOJ and the Fed to get through next week. There's a lot of noise surrounding that, and I think investors overall are choosing to pull money off the table or sit on the sidelines before we get more clarity. And in the region, the tech names are among the ones that are bearing the brunt of the selling. Hang Seng Tech is snapping what we saw earlier in the week where it actually entered a bull market. You're seeing Chinese developers run higher, but I think that speaks to the disconnect in the markets. While the stocks are higher, there's still those concerns lingering about Chinese real estate. We're getting that this week from Vanke, from Country Garden. There are no stimulus plans coming through from the China NPC. So that's what we're seeing in Chinese equities. Let's flip the board, take a closer look at what we're seeing elsewhere in Asia tech, because we are watching out for those Hon Hai numbers. This is, of course, Apple's main iPhone maker, and we are expecting the AI demand to help offset the slower iPhone sales. Ahead of that, its unit, Foxconn Industrial, already reporting a miss on net income, and we saw a fellow affiliate, Foxconn Technology, slumping by as much as 9%, the steepest decline since March 2020. Now, let's flip the board again. I want to take you to sort of what you're seeing among the Chinese and some of the other miners in the region as copper prices surge. And this is more to do with the supply aspect, as Chinese miners, the smelters, are considering production cuts. So that surge in the commodity is also lifting these Chinese, these Japanese mining stocks. Flip the board again. Let's take you to the cross-asset picture in Japan. Of course, we're watching out for the BOJ next week. As I say, there's a lot of chatter around what we're actually going to get from the central bank. But it seems like those mining, those energy-related counters are lifting the stock gauges. The yen is weakening towards that 148 level. Might be a sign of, the dovish comments coming through from the BOJ governor, causing investors to press pause for a little while. Tom.
OK, Ava Hong with a check on the Asian markets for us today. Thank you very much indeed. Let's switch focus then to the data that we're expecting out of the US and whether or not it will indeed move the dial in terms of Fed expectations. Traders then looking ahead to factory inflation data from the US later today, with retail sales and initial jobless claims also due. For more on this, let's bring in Mark Cranfield from Bloomberg's MLive team. Mark, what are you going to be looking at in terms of the data set that could potentially move the dial for us then?
Well, if anything, the PPI is the more important one today. Although, given that we've had a pretty hot CPI number earlier in the week, that already gives the Fed a lot to think about. So they would need something out of the box from the PPI numbers really to shift the dial too much. But that would be where the Fed will be looking. But they probably have enough information already to make their decision for next week. Now, of course, what traders really want to know is this big question about the dot plots. So here we are in March. At the beginning of the year, there was quite high expectations that they would even cut rates for the first time in March. Well, that's not going to happen. So since then, we've heard several people pushing back. Jerome Powell himself has indicated that the middle of the year, traders think June, is now the likely time. So what does the Fed do? Do they stick with 3 rate cuts for this year? They still have plenty of time. Even if they begin around the June time, they could still fit it in by the end of the year. Or do they go down to 2 dot plots? Apparently, only 2 people in the Fed need to change their mind and the whole picture changes. Or in extreme cases, we've heard some people think only 1 is necessary. So there's so much hinging, particularly for bond traders, equities as well, but especially for guys doing treasuries. They really want to know, what does the Fed think in terms of realistically how many rate cuts can there be? And Janet Yellen weighed in as well, saying that she doesn't think interest rates can go as low as they were pre-pandemic. A lot for traders to sort out in the next few days.
Yeah, interesting you bring up the comments from Janet Yellen then, of course, the US Treasury Secretary, Mark. What did you make of those comments? To what extent? Is that a warning shot being fired across the bow of the markets, or is that already kind of that scenario already priced in?
I think she's being realistic when she can see firsthand where US government spending is going. She knows they're running a large deficit. She can see the level of interest rates. So she's probably just warning people, look, if we continue to spend the way that we are, when you think of interest rates being 4% plus, they may come down a bit. Inflation is running higher than it was during her term in office. Put all that together, pretty unlikely we can take rates down to 1% or even lower. We are talking about a higher number. And of course, there's a big debate about where is the neutral rate? Is it now 2%, 3%? Where does it fall? Certainly, Janet Yellen is warning people that it's not going to be anything like the days after the global financial crisis when we had something close to 0 interest rates.
OK, Mark Cranfield, thank you very much indeed, with the preview, of course, of the important data out of the US later, and, of course, the assessment, the analysis of those comments that we heard from US Treasury Secretary Janet Yellen suggesting that rates will not get back to those pre-pandemic levels. Mark Cranfield, of course, from our MLive team. Thank you. Now to a really intriguing story, fascinating one that combines politics, geopolitics and, of course, a crucial business story. The US House of Representatives passing a bill to ban TikTok. That's unless its Chinese owner sells the video sharing app. The TikTok CEO, meanwhile, calling the news disappointing, not surprisingly, while critics called the app a national security threat.
Hi, everyone. It's Show here. Just wanted to share some thoughts with our US users about the disappointing vote in the House of Representatives. There has been a lot of misinformation, and I hope to clarify some things. First, thank you to our incredible community. You are what makes TikTok so special. Thank you for making your voices heard. Over the last few years, we have invested to keep your data safe and our platform free from outside manipulation. We have committed that we will continue to do so.
OK, let's go to Bloomberg's Asia Government and Economy correspondent Rebecca Chung-Wilkins standing by for us in Hong Kong. Rebecca, it flew through the House. It's expected to have a more challenging time in the Senate. What are the concerns being flagged by US lawmakers and the response from TikTok?
Yes, absolutely. As you say, I mean, the concern here is that TikTok isn't sort of adequately protecting its users' data because of its connection to China. course, has that Chinese owner, ByteDance, and that is really behind sort of this push. Now, TikTok itself, as you've just seen there, maintains that actually it has sort of gone to great lengths to make sure that the data isn't at risk. But as you say, this is really a company that's been caught in the crosshairs of China-US tensions here. And Beijing issued quite a robust statement, making it clear that it didn't want to see such a sort of kind of divestiture between the ByteDance and TikTok. The spokesperson from MOFA, from Ministry of Foreign Affairs, said that the US was bullying TikTok and that actually all of this eventually would end badly for America. And it kind of criticized these unfair practices. So it's been quite firm here. And TikTok itself is said to, while it's considering possibly divesting, that is really a last resort. And up until that point, it's going to take all possible legal measures to resist this.
And the bipartisan effort was clear, Rebecca. There is that bipartisan push. You see that in the House. But it seems to break down when it comes to the Senate. And we know there's a furious lobbying campaign underway. But there also seems to be divisions as well between the two presidential candidates. The way this is playing out domestically in the US in terms of the politics is pretty fascinating.
Yeah, I think this is really, really interesting. This is by no means a sort of surefire thing when it comes to the Senate. There is no co-sponsor for the bill there, for example. The majority leader, Chuck Schumer, has declined to endorse it. And we even have figures like Republican lawmakers actually saying they don't approve of this going forward. As you say, Biden previously has said that he would sign the legislation if it's passed. And Biden has previously raised this issue with Beijing too. But the other element here, as you say, is the US election. Now, Trump, despite being kind of quite hawkish earlier, talking about these potential 60% tariffs, has said he doesn't approve of this. So somewhat sort of whiplash policymaking. I think the key thing to flag here is that TikTok, unlike some of these sort of other geo-economic flashpoints that we've seen around autos or around chip making, TikTok is such a relatable topic. It has so much resonance and so much understanding in the American public. It makes it a very sort of different issue from some of the other debates around key sectors that have been caught between US-China tensions recently.
OK, brilliant breakdown of a really fascinating story. Bloomberg's Rebecca Chun-Wilkins, of course, out of Hong Kong on the potential fate of TikTok. Thank you very much indeed. Let's check in on what else is on the agenda then today. We're looking for inflation data out of Sweden, Swedish CPI. That's 7 a.m. UK time. An expectation that year on year, the February number is expected to move quite significantly lower from the previous month. You're looking at a print of 4.7%, down from 5.4% in the previous month, year on year. So that's Swedish inflation out at 7 a.m. UK time. Oil is suddenly much more interesting, given what we're seeing in terms of the stockpile and inventory reductions, and of course those attacks by Ukrainian drones on some of those refineries in Russia. We're going to get an IEA report out later today, 9 a.m. UK time as well. In the context of everything that's happening, oil at a potentially 5-week high right now. That's going to be really interesting. Currently, you're looking at $84 a barrel on Brent. Then it's the data front when it comes to the US. We've unpacked some of this for you, but US retail sales data, so a gauge on the health of the US consumer. And then, of course, the key one, at least for Mark Cranfield and the MLive team, producer prices at 12:30 p.m. UK time, and whether indeed the producer prices confirm that stickiness that we saw, the higher than expected CPI print. Do we get a similar picture coming through from PPI, or do we get a little bit of a reduction in the concern when it comes to inflation? Those producer prices and the factory prices really important out later today. Coming up, Apple's main iPhone maker, Hon Hai, is due to report fourth quarter earnings anytime now, really. And we're going to break down those numbers for you. What it says as well about the demand for AI and the demand for those iPhones in the crucial Chinese market. Plus, we're going to be live from Rome at the Bank of America Global Investor Summit. We're going to bring you an exclusive interview with Bernard Mensah, B of A's President of International. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Breaking lines crossing from Hon Hai, of course, the producer of the Apple iPhone, but also a lot of the AI hardware. And the redhead crossing the line, it is a beat coming through from Hon Hai in terms of the net income for the fourth quarter. 53.1 billion Taiwanese dollars, 53.1 billion versus the estimates of 43 billion. So on a net income basis for the fourth quarter, it is a solid beat then for Hon Hai. They also see in terms of the full year, they do see growth rising in terms of revenue growth for the full year of 2024. Fourth quarter operating profit, by the way, coming in at 48, close to 49 billion Taiwanese dollars. That was below the estimates of 51 billion. We know that analysts have been looking forward to that guidance around the full year, though, for 2024, and that's coming through expectations of growth for the full year. Again, this is a touch on not just the production of the iPhone, because, of course, this is the biggest contractor for Apple, but also on the AI hardware around AI servers. And there was an expectation that the slowdown in iPhone demand was going to be offset by the pickup in AI infrastructure. We'll continue to unpack that detail for you, but we know, of course, that Apple's sales in the Chinese market, the crucial Chinese markets, fell about 24% in the first 6 weeks. So it does seem like that narrative is playing out. We'll get more details for you. This is a crucial story, again, for multiple reasons on the Apple story and the AI demand picture as well. The stock currently just popping a little, up 0.4% over in Taiwan. Now to some of the other stories making news today. The European Union passing the world's most comprehensive guardrails on artificial intelligence after the bloc's parliament agreed the AI Act. That happened yesterday. The landmark set of rules could set the tone for how AI is governed elsewhere in the world. But the legislation's passage comes as some companies complain the law goes too far, while digital watchdogs say it doesn't go far enough. Dutch election winner Geert Wilders has dropped his bid to become Prime Minister. It comes after months of coalition talks following his shock win in November. Wilders took to X, the platform, of course, the social media platform, to say that, quote, I can only become Premier if all parties in the coalition support that. That wasn't the case, end quote. Wilders has been forced to step aside by his coalition partners in a compromise to advance to talks to form a cabinet. Coming up, we're going to take a look at the trade roadblocks to de-globalisation and the opportunities investors should be looking out for, how to invest along some of those themes. That is next. This is Bloomberg. Welcome back. Time for Terms of Trade now, our weekly dive into the state of globalisation. Conflicts and climate change appear to be focusing trade sentiment around the trend of de-globalisation. But some analysts argue that investors should think more about the investable realities around re-globalisation. Let's speak to Lauren Goodwin, economist and chief market strategist at New York Life Investments. Lauren, thanks for coming into the studio. A lot of the guests that we get on to talk around this segment push back on the whole de-globalisation theme. You're there as well on that. And whether you characterise it as globalisation 2.0 or reshoring or a reshift in the supply chain balances, there is a view that things are changing, but not necessarily within the prism of de-globalisation. How are you looking at it, and what are the potential investment themes that come from that?
Well, good morning, Tom. I think, first of all, there's no doubt that the world is changing, moving from a global economic model that was so focused almost unilaterally on expansion, cutting costs, efficiency. It's not just geopolitical events, but also the COVID-19 pandemic that made it very felt that this sort of dogged focus maybe didn't actually support the access and security of really important supply chains in the economy. And so in those supply chains like technology, energy, finance, what we're seeing is that the knee-jerk reaction to globalization isn't particularly investable. It's focusing on how we get to this new economic reality where opportunities come up.
And you talk about tech, and you think of tech, you think of semiconductors. You're making the case that actually the idea that you can have self-sufficiency around the semiconductor supply chain, it's just simply not realistic given the complexities. So how do you invest around that proposition?
Well, the reality for the semiconductor supply chain is still that not just 60% of chips, but 90% of advanced processing is made in Taiwan. And so the focus that many governments have on self-sufficiency, it's going to require a lot of investment, a lot of infrastructure, and that's going to take a lot of time. And so the innovation in tech, so to speak, is not so much in the specific types of technology, but in that digital infrastructure and in the political reality that's required to make it happen.
So where along the semiconductor ecosystem do you want to be focusing your investments?
A couple of areas. So we particularly like digital infrastructure, which can be manifest in equity and in bonds. So in equity, you're looking at the remaking of utilities, the technological infrastructure for even cell phones, 5G. And so it's a global listed infrastructure sort of equity complex where not only the technology component but inflation component are really interesting. You can find it in bonds too. A really interesting global opportunity we find is in infrastructure bond, which is actually a taxable municipal structure in the U.S. that's very global friendly. It's in a part of the yield curve that's actually, we see a good risk reward trade-off. So they're really an interesting way to lean into this digital infrastructure theme, which we think will be pervasive really no matter how the geopolitical environment
And you're
unfolds.
also looking at the energy transition. We get a lot of guests talking about this. When it comes to the energy transition, do you want to be investing in the commodities, in the raw materials that go into that shift? Or do you want to be investing further downstream?
It's a little bit of both. I think the reality for the energy supply chain is that today it's either highly unlikely or potentially impossible that we actually have all the raw materials we need for energy independence, not to mention a green transition. And so that investment in raw materials we think is important. By our math, for most investors, a 1 to 7% allocation could potentially be a strategic allocation as opposed to a tactical play.
In those raw materials?
Yes, that's correct.
1 to 7% allocation. Okay, interesting. Before we let you go, we've got one on finance as well. And you're thinking about deglobalization, or I should say, we talked about deglobalization, de-dollarization within that context. And you're making the call that maybe you get exposure to Bitcoin on the back of that. Just unpack that view for us.
Yeah, so when we think about de-dollarization, when it comes up the most with clients, it's often about how different countries are trying to fight back against dollar hegemony. And any currency dominance doesn't work for everybody all the time, right? But when we've seen major currency transitions over history, for example, from the pound sterling world to the US dollar world, it wasn't only about, or even majority about, geopolitics. You think about World War I, World War II, really that transition was about a more efficient global economic system, moving from a gold standard or a hard currency standard to a fiat system. And so if the dollar is to be replaced, it won't be from little bites at the heels of the dollar. It will be about a new efficient system that emerges. So Bitcoin we see as or cryptocurrency we see as speculative, as a risk asset. But the new, more efficient system is likely to be digital. And so that's in the long term probably a central bank digital currency. In the near term,
so how much exposure would you want to Bitcoin within that hedge that you're proposing?
For most investors, it's a very, very small bit because
right.
Bitcoin is perceived, well, it is diversifying, but that's because it's one of the most volatile asset classes out there. And so one of the ways that we balance that exposure is by looking at global equity allocation that includes a 50% actually currency hedge as a way to sort of navigate some of what we expect to be up and downs, not only cyclically, but structurally as well.
OK, Lauren, thank you very much indeed on the calls around reglobalization, how to invest around some of those key themes, whether it's energy, of course, semiconductors, or indeed potentially Bitcoin as well. Lauren Goodwin, economist and chief market strategist at New York Life Investments. Coming up, we're going to bring you an exclusive conversation with Bernard Mensah, Bank of America's president of International. That interview is up next, live from the lender's Global Investor Summit in Rome. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Stocks struggle for direction as investors eye US factory inflation data due today for fresh clues on the Fed's rate path ahead. iPhone maker Hon Hai reports its second straight quarter of strong profit thanks to lucrative AI hardware sales that helped offset weak smartphone sales. Plus, the clock ticks for TikTok. The fate of the popular video app is now in the hands of the US Senate after the House votes to force its Chinese owners to sell up or face a ban. Let's check in on these markets then. We had a little bit of downside coming through across Wall Street yesterday, a bit of a breather. We're waiting for that data then on the inflation front, producer prices and, of course, retail sales, but also jobless claims out of the US as well. That will build out the picture in terms of the health of the economy and, indeed, whether the Fed has a little bit of wiggle room to hold on and wait or if, indeed, it can pull forward expectations around a cut. 5,000 currently on European stocks futures, currently up at just under 0.1% after fresh records, by the way, for European stocks yesterday. FTSE 100 futures pointing modestly, very modestly higher. We need a next catalyst, it seems, for these markets. 7,776 being flagged for the FTSE 100 futures. S&P futures holding above 5,200, pointed to gains of 0.1% so far in the morning. A bit of a pickup then after the downside that we saw yesterday of just 0.2%. Nasdaq futures 18,384, pointing to gains of 0.3% after losses of about 0.8% yesterday. Let's flip the board and look cross-asset then. US 10-year, and we'll start there before we move through the currencies. The US 10-year at 4.19, just below that 4.20 handle on the US benchmark. Of course, the Treasuries will be in focus on the back of that producer price data out later today, whether there's any movement or adjustments in terms of expectations for the Federal Reserve. Headline, you're expecting a number of 1.2% year-on-year, ticking up slightly from the previous month. 147. Close to 148 on the Japanese yen, up just 0.1% as we build up to that important wage negotiation detail tomorrow from the key Japanese union. We know that the BOJ is going to be thinking about that ahead, of course, of its decision next week. $84 a barrel on Brent and Bitcoin, 73,464. We have some breaking lines for you. Broke the lines around Hon Hai, the earnings there. Now we switch to the defence maker over in Germany, Rheinmetall, a producer of ammunition, but also the Panther tank as well, of course, with the overlay of the conflict in Ukraine. And Rheinmetall now posting operating margins above estimates, 12.8% for the full year, 12.8% operating margins. The estimates had been for 12.4%. Operating profit, meanwhile, coming in just below the estimates, 918 million euros. The estimates had been for 924 million euros for Rheinmetall. That's full year. In terms of dividend per share, they have increased that 5.7 euros, €5.70 full year dividend per share. The estimates have been for 5.10, €5.10. They see 2024 sales of about 10 billion. That's the crucial line. They see 2024 sales of about 10 billion. The estimates have been for 9.59 billion. So seeing slightly higher sales. Again, we know that European capitals and European lawmakers are scrambling to get their hands on additional ammunition that they could send, of course, to Ukraine. Let's switch focus now. Traders, of course, looking ahead to producer prices then, retail sales and initial jobless claims out of the US later today. The closely watched numbers set to give more insight, we will be hoping, into the Fed's policy direction next week. Meanwhile, investors have gathered at the second Bank of America Global Investor Summit in Rome. Bloomberg's Francine Lacroix is there. Francine, good morning.
Good morning, Tom, and good morning, everyone. We're delighted to be here, of course, in Rome, beautiful Rome, talking about finance and some of the challenges ahead. I'm delighted to be joined by Bernie Mensah, President of International Bank of America. Bernie, thank you so much, as always, for giving us a little bit of your busy day. There's a lot going on. We were looking at data out of the U.S. We talked about the Fed, inflation, but then there's geopolitics. You go around the world and you're in charge of Bank of America outside the U.S. What do your clients worry about the most?
Thanks, Francine, and thanks for having me. It's great to be in Rome. I think that the main things are what we all think about, which is the global economy. Where are we? You know, what's the pace of slowdown? So there has been a little bit of a disconnect between what central banks have been signaling and what the markets are pricing in. So I think that's one thing. We can come back to that perhaps. The geopolitics is complex for people in business and finance. How do we price it? What do we think about it? Are things going to tip over or not? You look at indicators like oil markets, but they're not moving very much. But then you wonder, what future elections might bring through. I think in each of the C-suites that I go into, or each of the corporate executives I always say I think they're an incredibly, broadly, a very talented group that have been through a lot of crises, perma-crises, some of them think through. And I think supply chains and resiliency of that and inflation embedded in the supply chains, and if they have to think through operational excellence, are things that are at the top of their minds.
I mean, there's a couple of big Wall Street chief executives that said, look, we're too hopeful on the U.S. economy. We're unclear whether actually we go into the kind of the soft landing scenario that a lot of people are expecting. Many questions also on China. Again, when you look at inflation, how do you look at inflation and what the Fed has been telling us?
Yeah, I have always been a little bit personally, higher for a little bit longer. And I think that's just because as you travel around, you see some of the constraints still in the supply chain, some a little bit from COVID, some from things like the Inflation Reduction Act that has resulted in some of the what people term as the sort of U.S. exceptionalism, as it were. So I've sort of felt that that would stay a little bit, higher for a little bit longer. The other thing that some market participants have started to think through is what will be the terminal rate, right? So even if it is slowing down, should there be a new underlying rate? And I think some central bankers are thinking through that. What are the productivity impacts? And are there things, whether it's climate, whether it's geopolitics, that means that actually we might settle at a different rate to where we were before.
But so, Bernie, do you actually worry about it, maybe a bit too much exuberance in markets that could translate into chief executives taking wrong decisions, for example, onto where to put their investments?
I think about it in terms of pricing risk and mispricings. Yeah. So we all worry about it. I think the markets do, the central bankers do. What is that disconnect? Financial markets going up drive a certain type of wealth effect. There's a drive a productivity effect. So those are the things that drive. You can have two people very reasonably disagreeing on those, and I guess it sort of makes the markets go around. But I would say that I worry that if there is too much of that, there always will be. The reaction functions of central banks are different. They're data dependent. There's a bunch of things that feed into that. But if it's too much of a disconnect, then yes, it might mean that people are making suboptimal decisions. Maybe they're moving when they shouldn't, or they're moving, too slowly.
Are you confident? 2023 was a difficult year for a lot of the banks. A lack in IPOs. I think a mismatch when it comes to M&A. Do you see green shoots for 2024?
Yes, I do. The banking markets, actually, if you look at over a 10-year period, 2023 wasn't actually that bad. But what we had was an incredible 2021, 22, and there are some institutions that staffed a little bit for that, and tried to anticipate where the markets might trend towards. So I think that the markets are 23 was what it was. For 2024, we're seeing a lot of activity in terms of corporate balance sheets and looking to take advantage of situations. So there have definitely been some green shoots. But there were green shoots in 2023 as well. And we managed through that. I'm sure we'll manage through 2024.
I mean, what are you most hopeful about in terms of regions for this year?
The regions, I would say there's probably a little bit more of a consensus around that. When you go around, generally, the U.S. is the biggest region people are most positive about. India is on everybody's list. Mexico is. I was in Mexico City and in Monterrey a couple of weeks ago. It's tremendous. Everybody knows Mexico is now the largest trading partner. What's the quality of that supply chain move to Mexico is the questions that I asked when I was on shore. And the Middle East, of course. We were in Bank of America had an event in Saudi Arabia a couple of weeks ago. It was interesting to see. I've been in the region for a few times recently. So those would be the few areas. Japan, in terms of financial markets and the strengths of the Nikkei, and we haven't really talked about that, right? The other thing that is on people's minds is what's happening in China, and it's Japan's finally coming out of the zero bound.
I mean, Japan is exciting. We talk about it almost every day. Does it matter if they start doing it sooner than maybe the markets are expecting, or is it is there a long-term opportunity in Japan? Full stop.
Japan matters as an old fixed income person. I look at things like the yield curve control policy and when that comes through, and the yen as a funding currency, which it has been for a long period of time. So I do try to think through what happens when Japan really does settle into positive rates. There will be winners and losers, and corporate balance sheets and bank balance sheets, and the cost of the Japanese Treasury funding its own debt will be a question, but I think it'll be a new paradigm which we haven't seen for a while. I think that'll be interesting.
Talking about regulation, how much is that on your mind? So there's Basel III, there's all the things that we heard also from Jay Powell and possible capital changes in the U.S. Does it change the way you operate and do business internationally?
No, what it does is I think that we've had to focus on that for quite a while, and we've been through a series of regulatory changes going back to the financial crisis. So we're managing our way through that. We're all super focused on what is called the Basel Endgame. It's interesting to see what Jay said. And there are other regulations that are coming through all the time, whether it's climate, whether it's AI. We think one of the advantages we have is we have the scale to manage through the complexity. We're in over 35 countries. We have 50 regulators looking at every single thing that we do. And it's important. We are a regulated industry. We need to be. But I think that our scale and just the incredible quality of our people all around the world means that I think we can manage our way through that. We have our opinions on different bits of legislation, whether they're necessary or not, and whether there's overreach or not. And certainly you have different regulatory, whether you call biases or emphasis in different parts of the world, but we try to manage through that.
We're here in Rome. How's Europe doing?
Europe is doing, I try to be a Europe bull as much as I can. Europe is an incredible place, incredible talent. Italy that we are in, I think has had a very decent run. I was talking to somebody that sort of said, well, let's not forget that for all of the things that we associate with Italy, the great weather, the food, the tourism, Italy has the 5th or 6th most quoted, is the most quoted country in terms of scientific journals. And there's a lot of, and the strength of the Italian diversity around its supply chain is tremendous. Around Europe, I think there is a focus in terms of the challenges that are in front of them. There's been some movement in terms of capital markets union and banking union, which I am, in a little geeky way, very excited about. Yeah. We've been, us and I'm sure other colleagues in financial services have been making this case very strongly that it should be a focus, and it feels like it's coming a little bit higher up the agenda. So it feels a little bit better.
I mean, I feel like the million-dollar question that I've been asking for the last 10 years is, will we see a proper capital markets union in our lifetime?
Absolutely.
Are we really getting closer? There was a movement last week.
Exactly. It feels as if France has picked up the baton a little bit. Germany has a little bit. I think it's just a key piece of the jigsaw when Europe thinks about reflating, when it thinks about trying to increase its trend growth rate. If you take Italy in the country we're in, over the last 20 years, I believe it's been something like just under 1% per annum growth over the period of time. That's too low, and everybody recognizes that. And what we've been trying to convince people is that for Europe, where the capital markets are relatively small compared to the size of the economy, there's something to be said for pooling that to reflect the single market that the Europe is working its way through.
Bernie, as always, thank you so much for joining us. That was Bernie Mensah. With that, I'm going to send it back to you, Tom, in London, and we'll have plenty more from the Bank of America conference here in Rome throughout the day.
OK, great conversation. Stunning backdrop as well. Bloomberg's Francine Lacqua speaking to Bernard Mensah, the president of International Bank of America. Thank you, of course. And Francine is going to have plenty more interviews from Rome today, including exclusive conversations with the former president of Croatia. Also, Bank of America Chief Investment Strategist Michael Hartnett, and, you don't want to miss this one, Blackstone President and COO John Gray. Plenty more coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now to the story and the corporate earnings story of the moment, which is Hon Hai and the AI boost that has come through for that business. A lift there in terms of the earnings revenue. They see profits soaring 33% on that AI demand. So that AI demand seemingly outpacing the softness that we're seeing in terms of the production, of course, of Apple's iPhones. Let's get the detail then on this story and bring in Robert Lee from Bloomberg Intelligence. Rob, what stood out to you then from the Hon Hai earnings?
Yep, thanks, Tom. As you said, the business saw a good sequential rebound into Q4, partly driven by the AI-focused side of their business. However, if you take a step back and look at 2023 as a whole, it was a relatively weak year for them, mainly due to destocking in their core smartphone and PC-exposed businesses. However, as we know, the stock market is all about looking forward. Looking on consensus numbers into 2024, the company should have a much better year as their main customers start to rebuild inventories. However, more than half their business comes from Apple, and as I'm sure yourself and your viewers are well aware, there's been ongoing weakness on the demand front relating to Apple iPhones in China. So I think, it's all over to the management to see what they say on the earnings call later on today in Asia.
OK, yeah, that's worth emphasising, isn't it? More than half their revenues coming from Apple. When we see that softness down, sales in the Chinese market for Apple down about 24% in the first 6 weeks, according to one report. Rob, I guess the big question is to what extent then the AI story can continue to drive things higher for Hon Hai, even as there's that vulnerability around Apple. What precisely are they doing within the AI space? Why are they playing this important role now?
OK, so, I mean, their business is an assembly business, but it operates on huge volume. I remember hearing quoted years ago that on one single site in southern China, they had 1 million employees, just to put things in context. So this operates at a massive scale but thin volume. So they are picking up more business on the AI server side. There's been some speculation in the market of them winning new orders potentially from HP. It remains to be seen if there's any truth in that or not. So I think absolutely in common with many tech businesses at the moment, AI looks good. But again, when more than half your business is coming from Apple and there's a question mark as to the sustainability of demand on that side, I think that is going to overhang them. So hopefully the management will give some more clarity come the earnings call later today.
Rob, what is your assessment then in terms of the challenges that Apple faces in that crucial Chinese market? Is this a blip for Apple, or is this more of a sustained downturn that we're seeing?
OK, I just think anecdotally to, people, relatives, etc. that I know, you look at the quality of Chinese-developed smartphones, the Hon Hai's and other, the Huawei's and other brands, they're actually not bad. I mean, and in many ways, you get good features at a cheaper price. So just in simple terms, it's a great incentive to people to look at these brands. I think as well with the geopolitical situation at the moment, and there's a degree of patriotism and nationalism in all countries, maybe again that's pushing the Chinese consumer to look at the domestically developed phones as opposed to Apple, etc. So I think those two sort of factors are likely to play out, through this year and next, with the risk, I would say, overall remaining on the downside to Apple going forward, unfortunately for them.
OK, risks potentially to the downside for Apple in that Chinese market. Robert Lee, thank you very much indeed from Bloomberg Intelligence on those Hon Hai earnings, of course, still getting more than 50% of their revenues from the iPhone maker, but seeing a second straight quarter of strong profit growth driven by AI. Now to some of the other stories making news this Thursday then. Chinese Premier Li Qiang has called for an acceleration of that nation's AI development in a visit to top local firms. His visit to Baidu and Nora Technology Group comes as the US looks to further restrict Beijing's access to cutting-edge technology. According to state media, Li says AI is an important engine to develop, quote, new productive forces, which is President Xi Jinping's latest slogan for high-tech growth. Bloomberg has learned that Donald Trump has talked about hedge fund titan John Paulson as Treasury Secretary if he wins November's presidential election. Sources have told us that Trump has held a series of meetings with the potential cabinet picks, and Paulson's name has come up in recent discussions. The European Union is working on an aid package for Egypt that will provide around 7.4 billion euros in a mix of grants and loans. The push to help Egypt has become increasingly urgent after the government carried out a long-awaited devaluation that allowed its currency to weaken more than 38%. Cairo is also dealing with the fallout from the Israel-Hamas conflict. US Secretary of State Antony Blinken is calling on Israel to boost the amount of food aid getting into Gaza. America's top diplomat says supplies allowed in since the outbreak of the Israel-Hamas war remain insufficient. Blinken's comments come after the US resorted to airdropping aid and a pledge by President Biden to build a temporary pier off the coast of Gaza. OK, here's what else we are looking out for today then. 11 a.m. UK time, NATO's Jens Stoltenberg will release his annual report. Of course, the focus likely to be on the conflict in Ukraine, possibly also lines in there around that Israel-Hamas conflict as well. At 12:30 p.m. London time, US producer prices, so inflation data on the factory floor, how that informs our views about the next steps for the Federal Reserve. Retail sales, jobless claims data also hitting the terminal as well. Finally, the ECB's DeCoste, Knott and Schnabel and de Guindos all due to speak at events through the day. That's after we heard a few dovish comments from some ECB officials yesterday, suggesting that the first cut could come potentially in April, more likely in June. That was a line from the governor of the Bank of France. Plenty more coming up. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. So we're going to host data out of the US later today, including jobless claims, retail sales data, but arguably the most important print that will come through today will be producer prices out of the US. Whether or not that confirms the stickiness, the relative increase that we saw in terms of consumer prices, or in fact puts a question mark over that. Here's what's been happening longer term then. You saw this big pickup in the summer of 2022, but a lot of work has been done to get those producer prices lower. Again, monetary policy playing that role, of course. The biggest component, services, so we'll be watching for that. But also energy is now in contraction in terms of the component, the basket, the mix within this producer price component or overall picture. Whether that stays the same, though, is going to be a crucial question. We have the IEA report out later today. We've seen Brent higher. We've seen some of the geopolitics at play and, of course, the inventories being reduced in the US. So think about energy as well, even though it is most recently in negative territory. Headline, you're looking at a number of 1.2%. That's the expectation, the estimate, ticking up from 0.9% in the month of January. Let's flip the board and have a look at the BOJ. Of course, still in focus for us today. We get the union data tomorrow and then, of course, the decision next week. This is really interesting. Don't forget, 2010, the BOJ started buying Japanese stocks via ETFs. They started that in 2010, 14 years ago. They're now thinking about walking that back. We got to the records, of course, across Japanese equities. They've had a few bit of pressure in the last few days, marginally in positive territory as things stand. They haven't intervened. They haven't bought via these ETFs since October of last year. But now we are reporting that they are considering ending that policy. They don't think it's needed anymore, arguably, but they will still continue to intervene. The expectation is in the bond market. So that's just worth thinking about, another component in the BOJ story. Let's flip the board now. Another part of the Asian region, India. It's been such an outperformer in recent years, but the narrative has changed year to date. It's now one of the underperformers across the APAC region. We've seen, when it comes to the small caps in India, a really intriguing story. $80 billion worth of losses just in 2 weeks. Regulators flagging overheating there. Analysts saying that given the valuations, you could see further downside. Just one example, in the last 2 years, around 5 stocks, 5 mid-cap stocks have returned about 1,000%. 5 stocks, 1,000% each, just in the last few years. The overheating, as regulators would define it. Again, putting pressure more broadly on the Indian equity space after a couple of years of very, very solid gains. A bit of a picture there then across the producer price story around the US, India and, of course, BOJ as well. There's plenty more coming up. Francine is going to have more interviews from Rome today, including exclusive conversations with the former president of Croatia, also the Bank of America chief investment strategist Michael Hartnett, and Blackstone's president and COO John Gray. Up next, though, markets today. This is Bloomberg.